Everybody loves a good contest, right? As an investor, I certainly do, especially when I own both of the contestants, and double especially when both are big winners. The two stocks I recently bought and we'll talk about today are such leaders in their industry that they're considered equal parts of a duopoly. Indeed, I'd be willing to bet that you used at least one of their products this week, maybe even today. It's hard to even mention one without thinking about the other. Yin and yang, frickin' frack, bread and butter. Well, with these companies, it's mostly about the bread, baby. Over the years, these financial technology giants have consistently thrashed the overall market, although one has been more dominant in recent years. How will these stocks do going forward? That's the fun part, as they battle for supremacy right here in our own portfolio. Hi everybody, my name is Mike Nadell, here for the Dividends and Income channel. Before I talk in depth about these great companies, I'd like to ask that if you appreciate this content, please click the thumbs up at the bottom of the video, subscribe to our channel, and also ring the bell so that you get notifications of new videos as we publish them. I'm going to get to those stocks in a minute, I promise. But first, let me tell you about the Real Money public portfolio where we hold these two stocks. Many of you who are familiar with our Dividends and Income channel know our co-founder, Greg Patrick, from his own video. Well, for 3.5 years now, on our website, I've been managing the Income Builder portfolio for him. Twice every month, I choose stocks for the portfolio, and I execute purchase orders for them with the $1,000 Greg allocates each time. That's right, everybody. I get to go wild with another person's money, while Greg suffers losses if I happen to make a boneheaded pick. Not that I would ever do such a thing. He also gets the capital gains from all the winners I choose, and the delicious dividends are all his too. So far, the IBP is 41 stocks strong, worth about $115,000. It's generating almost $3,000 in annual dividend income. The IBP's primary goal is to build a reliable, growing income stream by making regular investments in high-quality, dividend-paying companies. We have a secondary goal too, to build a portfolio that will experience solid total return. That last part of our goal, total return, is where the Income Builder portfolio's two most recent buys really shine. I'm talking about the king of credit cards, Visa and Mastercard. These companies have similar business models. Unlike American Express and Discover, their distant competition, Visa and Mastercard do not issue credit cards directly to customers. No, they go through banks, so the banks take the risk. And Visa and Mastercard do not have to worry about making loans or operating as banks themselves. They earn most of their money through service fees and data processing fees. It's a brilliant business model, and their financial metrics show it. Here is Mastercard's return on equity over the last decade, and here is Visa's. Here is Mastercard's historic operating margin, and here is Visa's. Here is Mastercard's historic earnings growth, and here is Visa's. And here is Mastercard's historic sales growth, and here is Visa's. And so on and so on and so on. You name a financial metric, and these companies have killed it over the years. One thing you might have noticed is that in some of those categories, there was a pretty big lull in 2020. Maybe even a decline. It just demonstrates how even many incredibly strong companies were adversely affected by the COVID-19 pandemic. What hurt Visa and Mastercard was the lack of travel, which led to depressed cross-border transactions. Those command higher fees and create bigger margins. Domestic spending did pick up nicely in the second half of the year, and there's a lot of pent-up demand for international travel. As the vaccination levels increase around the world, travel will increase. So it's only a matter of time before that cash cow gets the Mastercard and Visa bread machines cooking again. I'm all about picking outstanding businesses for the IBP, and it's almost impossible to find companies with better quality metrics than Mastercard and Visa have. Wide moats, which means significant competitive economic advantages, financial strength, excellent credit ratings, reliable dividends. What more could you want? Well, if great value is what you want, I do have to admit Visa and Mastercard don't appear to offer that now. In fact, they pretty much always command premium valuation, and each is near its all-time high price-to-earnings ratio. Visa is trading at more than 40 times projected 2021 earnings, and Mastercard's forward PE ratio is approaching 50. Yikes! Morningstar says each is overvalued by about 15 to 20%. But you know what? That's been the case pretty much every time I've ever bought shares of these fine companies, whether from my personal accounts or for one of the public portfolios I manage. Most of the experts said they were pricey, but don't be me, I bought them anyway. And look at the market-crushing gains I've had to endure. What's interesting to me right now is that most market analysts still think both of these companies have plenty of room to run. For example, of the 19 Mastercard analysts surveyed by TipRanks, 17 are calling the stock a buy, with an average 12-month target price that offers a 15% upside. Meanwhile, 19 of 22 analysts in the TipRanks surveys say Visa is a buy, again suggesting that those who invest today will be quite pleased a year from now. Please understand, I am not saying buy, buy, buy. That is not my style. I like to tell you what I'm doing and why, and I trust that you are smart enough to conduct your own due diligence to decide if you want to pay the premium for these companies. Besides valuation, another category that might give some investors pause, specifically those who are into dividend growth investing, is that Visa and Mastercard each yields less than 1%. Indeed, although they've been growing their dividends by pretty sizable percentages for many years, they are the two lowest yielders in our income builder portfolio. But you know what? I'm a dividend growth investor myself, and I happen to think that even income-centric portfolios such as the IBP have room for a few proven, wide moat, super high quality growth companies. Before I wrap this up, I made a big deal out of the contest between Visa and Mastercard, so what's the latest on that? Well, we first bought the companies for the IBP in April of last year and followed that up a month later with another purchase of both. And here's the scoreboard to date. As you can see, Mastercard has been the winner so far. But as you can also see, there really has been no loser. I've been quite pleased with both of these companies. Mastercard did outperform Visa quite significantly from 2016 to 2020, outgaining Visa every single year during that stretch. So why even bother owning Visa then? Wouldn't the income builder portfolio have done even better had we invested all of those allocations in Mastercard rather than splitting them between the two companies? I mean, sure, but I'm not a fortune teller, are you? Also, just because something happened in the recent past, it doesn't mean it always has been that way, or that the trend necessarily will continue. From 2012 to 2015, in fact, it was Visa, not Mastercard, that won the stock performance showdown. So if an investor in 2015 had assumed Visa outperformance would continue indefinitely, and therefore ignored Mastercard, he or she would have missed out on some sensational gains since then. Oh, and so far in 2021, Visa has had the slight lead in our little contest. When two fine companies rule an industry, it's difficult to predict which will shine brightest in the future. So I like to own both and let them duke it out within my portfolio, because I'm pretty sure both will be winners, just as Visa and Mastercard have been. Thanks for letting me introduce you to the Income Builder portfolio. Last year, I started another real money project, the Grand Twins College Fund, a market-crushing portfolio that I discussed at length in my previous video for the Dividends and Income channel. I'll be back with a new video about the GTCF in a week or so, and then another about my next IBP selection soon after that. Again, please give us a thumbs up, subscribe, and ring the notification bell so you don't miss out on any of our new content. Take it easy, everybody. Back at you soon.